In Market Mania, how to avoid getting fooled by the market in April. Here to explain is Bryan Sapp, the senior market strategist at Schaeffer's Investment Research. Great to have you with us. And despite plenty of negative headlines, April tends to be a strong month, with investors selling in May and walking away with the gains that they captured in April. What can you tell us?
Right. The news, if you turn on CNBC or you read the Wall Street Journal, whatever it may be, everything that you're seeing is, yield curve inversion, recession imminent, things are awful, supply chain issues, things of that nature, which, there are a lot of issues right now in the market fundamentally, especially longer term. That said, April historically has been one of the strongest months in the market. Going back since 1983, we've had an average return of almost 2% in the month of April. And it's been positive 74% of the time. And taking that a step further, in the past 10 years, we've had an average return in April on the S&P of 2.6%, and it's been positive 9 out of the last 10 years. So April seasonality rivals December, which everyone knows about the Santa Claus rally. Everyone's aware that the market has a strong tendency to rally the last few weeks of the year into the year end. Well, you don't get a lot of people talking about April, but the numbers in April are very comparable to what we generally see in December historically.
A fresh earnings season is coming up. What's the expectation on the banks, especially the big banks?
Yeah, that's going to be one that everyone's watching. The banks all report next week, or at least all the big ones do. And, the yield curve being inverted, that's generally a very, very bad sign for bank earnings. Their net interest margins get compressed. That said, this has been, front run, or this has been, everyone has been aware of this for weeks, months now, right? Like the yield curve has been sort of compressing. So, what matters most, I guess, is expectations into earnings. If everyone expects the banks to just miss by a mile and the bar is really low, then maybe they'll be given a pass for their earnings. The price action on financials has been really weak the last month or so. They led the market. They've kind of been the darlings of the market for the longest time. Everyone loves investing in financials, for a lot of good reasons. And, here recently on yield curve fears, I think is the primary driver. Everyone is expecting their profitability to come in really low. And I think there's the potential for an upside surprise there just because there's so much negative sentiment around those now.
Thank you, Bryan, for doing some Market Mania with us.
Yeah, thank you.
Go to businessfirstam.com for where to see our show on TV.